Welcome to The Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to The Weekly Option. This is episode 45 on January 19th, 2019. I'm your host, Eric. And in this week's show, we will cover trades from last week on Carvana, Kronos Group, and American Airlines. And we discuss 3 new trades on Vodafone, Twitter, and eBay. Now, it's always great to hear from listeners. So if you have any questions about the trades presented here on the show or about some of your own positions, feel free to email me. You can reach me at eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. Or you can just reach me on the contact page of the website for The Weekly Option. Now, I've also created a short video series to teach you all the basics of option trading that you'll need to know in order to follow along with me on this show. You can visit our website and click on the videos tab to watch those videos, or just find us on YouTube. Look for the channel for The Weekly Option podcast. Now, we had another strong week in the equities market. In fact, this is our 4th consecutive week of positive returns in the market. The Dow Jones Industrial Average rose 710 points this week, closing at 24,706 points on Friday. The S&P 500 index finished 74 points higher this week, closing at 2,670 points. Now this week, we will hear from 302 publicly traded companies in the U.S. On their earnings. On Monday, we'll hear from Wynn Resorts and SandRidge Permian Trust. On Tuesday, I'll be looking at TD Ameritrade, Haliburton, and Johnson & Johnson. On Wednesday, we'll hear from Procter & Gamble, Raytheon and Texas Instruments, also Northern Trust, Ford Motor Company, Kimberly Clark, and Comcast. On Thursday, we'll hear from American Airlines, Southwest Airlines, Alaska Airlines, JetBlue, Bristol-Myers Squibb, Freeport-McMoran, and Starbucks, so quite a few on Thursday. On Friday, we'll finish the week hearing from Colgate-Palmolive and then NextEra. So quite a few earnings to take a look at or keep in mind for your trading this week. And as the topic of the week, I actually want to discuss something that's definitely a part of this game, the trading game for sure, and that's confidence. And a lot of people get caught up reading trading mentality books, and I don't go too far into that. When I was in college, actually, I used to read a lot of mental game of trading books, and to be honest, I read a lot of that as procrastination. It was always this idea that I needed to learn one more thing or make sure my mind was right when I'm trading. I don't think you have to start there. And some people may disagree or agree with me, and feel free to email me if you like, if you feel one way or the other. But the mental game of trading is an important one, and I felt like once I understood trading, once I had a better grasp of technical analysis, had a better grasp of option trading, and some of the other fundamentals of how to value different assets, how to trade futures. Once I had some of those pieces in place and could then go out and make trades in the market, then I turned back and said, okay, my mind has to be in the right place, because if I'm feeling weak, my trading tends to show. Or if I'm feeling uber aggressive, if I just finished watching something like Die Hard or Rambo or Independence Day, something that makes me feel manly, I might go out and make some foolish trades in the market because I let aggression and I let the aggression take over the mental processes rather than having a methodical, logical approach to trading. So confidence is what I want to talk about this week, and confidence is huge. When I trade, I always have an expectation of winning. I always have an expectation of winning. Now, I also know that one of the beauties of confidence is that I also know that there's a possibility that I'm not going to win on my first try. So, but I also am confident that I know enough to be able to turn a loss into either a scratch trade or a positive. So I not only expect to win, but I also have confidence that if I have a loss, I'm going to find a way to make it a short-term loss so that I can ultimately win the war, even if I lose a couple of battles. And that just comes with time. So I wanted to give you guys 3 ways to improve your trading confidence. And again, let me just say the mental piece of trading is important. I didn't mean to diminish that earlier. I just don't want you guys to use it as a means of not trading. Like, once you're trading, focus on the mental game. But if you don't feel like you know enough to trade yet, get some solid, technical, and I don't mean technical from the standpoint of analyzing stock charts. I mean technical as far as, some skills. Learn some skills around trading and start making trades, and then you can go back and focus on this mental game. But here are 3 ways to improve your trading confidence. So first off, number 1 is just trade. Nothing beats taking action. I go to bookstores quite a bit and look for different books, and because I like to read. But one of the books, the title of it is a phrase, and I'm not advocating the book, but I just love this title, and that's "You can't teach a child to ride a bike in a seminar," right? I can tell you what it's like to trade on this show. I can tell you my trades that I make, or some of the trades that I'll make this week. I can even tell you how I'm thinking about trading, but you won't learn to trade until you start trading. And you won't gain the confidence that you know how to trade until you start trading. So number 1 is confidence. Number 1 is trading. Number 2 is learn more. Read. Listen to podcasts. Like, the fact that you're listening to this show is a positive thing, assuming you're learning something. Watch videos on YouTube. There's a lot out there. Enroll in a course like the Option Studio, where you can learn to trade options. But, my program is just one of many. There's so many ways to learn. So take the time to learn. That'll help you have more confidence. And that leads to back to number 1, which is making trades. Nothing will build your confidence like making trades. And if you understand options well enough, even if those trades are losing trades, you'll have an idea of what else you can do to make a losing trade a winning trade. I mean, no one is 100%. If anyone tells you that, like every trade I make wins, they're either really not trading much or I'd have to see the data. Maybe in a short period of time. I've had months where, where every trade was a win. We've even seen that on some of the shows where, the market was going in one direction and we kept making money on specific types of trades. So you just keep doing that. That can stretch out over time. But look, you guys will hear me on the show. If you've listened for any amount of time, you know that all of my trades don't win, but I find a way to limit the loss or possibly make money on the back end. And then the number 3 idea that I have, or the third way to improve your trading confidence is paper trade. So, there might be times where you have a stretch where you don't feel confident about trading, about actually putting your actual dollars at risk, and that's okay. Keep learning, like I said in number 2, but then in number 3, pull out the pen and paper and start walking out, like write out trade ideas and what you would do. I'm hoping you guys follow along with me on this show so that you can see that the method actually works. It works. If you understand options well enough, you'll know how to maneuver your position and try and make money. I mean, it's not magic. It's not mystical at all. It's just math. And that's the beauty of option trading. So paper trading is a great way. You can create a routine that leads to successful trading habits. So that's it. Number 1, make more trades. Number 2, learn more. And number 3, consider paper trading and following along with me or anyone else that's out there so that you can gain some confidence and start making trades. So all of that being said, let's talk about last week. So the first thing I want to make sure you know is that Friday, January 18th, was options expiration for January. So all January option positions are either settling at their intrinsic value or at zero. They'll have no value going forward, and you won't see those in your account, just the results of them. So last week we talked about a covered call on Carvana. Stock symbol was CVNA, Charles Victor Nancy Adam. The stock at the time was trading for $36.80, and we looked at selling the February 37 call against that stock, collecting $3.20 on that call, looking at a 9.24% return in 5 weeks. Well, Carvana stock rose 11 cents this week, ending the week at $36.91. The call which we sold actually fell in price by 50 cents as well. Now, it's rare that we benefit on both the stock price, meaning the stock goes up, and the option price, meaning that call option that we sold got cheaper as price went up. We'll take this as a win. If you close your position right now, if you were to close it out right now, you could lock in 61 cents per share profit. Now, of course, that's only about 20% of the overall profit that we hope to make in this trade. So at the end of the day, this trade is working. And if you put it on, I would actually consider staying in it. The second trade we look at is a credit spread. And last week we talked about Kronos Group, symbol CRON, Charles Richard Oscar Nancy. The stock at the time was trading for $13.67. And I looked at selling the February 13-12 put spread for 41 cents, and that creates a maximum loss of 59 cents. Well, Kronos stock actually finished the week $1.23 higher, so it finished at $14.90 this week. The out-of-the-money put spread, which we sold, is even more out of the money. So we sold the spread last week for 41 cents, and right now you could buy that spread back for 28 cents, and you lock in 13 cents of profit per share, or really 13 cents per spread. Now remember, I speak in option pricing. Each option represents 100 shares, so it's not 13 cents. When I speak in terms of cents, you actually have to multiply that by 100. So you're really looking at a $13 per option profit for the week. Now, that's only about a third of our full expected profit. So I would simply stay in this trade. I'm looking at staying in the trade. And, if you stay in the trade, that means you definitely have to keep an eye out for any large moves against you in this stock. So it has about 4 weeks left. So you don't want to allow a winning trade to turn into a loss. But when it's working, you got to let it work. You don't have to, you can really limit your overall upside potential if you take money every time you see it. Sometimes you just have to wait a little while. And these February trades have 4 more weeks left. Our final trade is a debit spread. We looked at American Airlines, symbol AAL, Adam Larry. The stock at the time was $31.80. Looked at buying the February 33-32 put spread, paying 64 cents for that spread, which creates a maximum gain of 36 cents or 56.25% return in 5 weeks. Well, this is actually our loss for the week. American Airlines stock rose $2.17, ending the week at $33.97 per share, almost $34 per share. The in-the-money put spread, which we bought, is now out of the money. So that spread, which we paid 64 cents for this week, can now be repurchased for 30 cents. So that's a loss of 34 cents on the week. Now, I don't like losing money, as you guys know by now. So let's look at what I could do against this loss. Well, I'm looking at the 31.30 put spread, which is even more out of the money. Right now it's being offered it's bid at 17. It's bid for 17 cents. So that means we could actually sell 2 of these spreads and close out the position on the put spread that we bought, and we'd be back at flat. So if we were to sell our spread, just to walk it through, if we were to sell the spread that we bought, last week. We bought a spread for 64 cents. We would be selling that spread out for 30 cents, which locks in a 34-cent loss. And then we turn around and sell 2 of the 31.30 put spreads for 17 cents each. That gets us our 34 cents back, right? That would leave me flat as far as position goes, or not flat in the position. We'd be short the 2 put spreads. It would leave me flat from a profit standpoint. And of course, I'd be out of the commissions as well. Now, it changes the risk on the trade significantly, but accomplishes my goal of not losing any money. I'll have to be vigilant against any downward moves in the stock if I do this. And that's the approach from the option side of things. Let's look at what's going on fundamentally, because that might change the idea a little bit. So American Airlines is announcing quarterly earnings on Thursday, and the airlines that announced last week had mixed outcomes. So United Continental actually finished really quite a bit stronger after earnings. Delta Airlines didn't have that same strength, but they also have different credit, different credit outcomes, and there are other factors that might be coming into play with Delta Airlines. And the big 3 in the U.S. are American, Delta Airlines, and United Continental Airlines. I should throw Southwest Airlines in there too. They're huge as well. So this is one of the reasons why it's good to keep an eye on earnings each week, especially if you're involved with, you want to know the earnings for not only the company that you're trading, but the industry as well, because that could affect your stock. So if American Airlines does have strong earnings on Thursday, then this stock's going to go even higher, which will mean that the put spread that we could exit for 30 cents, it's going to be even more or worth even less. Now, of course, if they announce really poor earnings, you could end up having this spread be back in the money, and everyone's happy for it. So lots of options, lots of things to consider with this trade. You could look at the break-even price in the stock and say, you know what, we passed our break-even, so let me just exit this trade for now. There are 4 weeks left in October, so I could actually wait until I could exit the trade now. Let American announce their earnings on Thursday, and then look at possibly re-entering another trade on Friday to either to make back my loss on American Airlines stock. And that might be the way. That might be the more conservative route, rather than staying in and hoping for the best. Hope is a bad trading strategy. Maybe I'll talk about that as a topic someday, but I don't like hope. I like math. I like numbers. I like statistics. Hope doesn't. Sometimes hope works, but not the best. So let's look at the trades for this week. So as of Monday, many of the companies that we watch will start pricing their half strikes, meaning the 50-cent strikes, rather than simply being the $1 strikes that I'm looking at this week. So a lot of times I prefer the 50-cent wide spreads over the $1 spreads. And as of market open, many of those strikes will be priced in. So you can look at many of the trades, the spreads that I'm looking at specifically this week, and just know that I will be looking at repricing them as of open on Monday, because I might prefer the 50-cent wide strikes instead. So we'll start off with our covered call, just like normal. We've got a covered call on looking at Vodafone stock, symbol VOD, Victor, Oscar, David. The stock ended on Friday at $19.30. And I'm looking at selling that February 20 call against it and collecting 32 cents. That'll yield a 5.28% return in 4 weeks. Now, you'd enter this trade by buying Vodafone stock for $19.30 and then selling the February 20 call at 32 cents. This trade will reach its maximum return if prices end in a few weeks higher than $20 per share. One of the things I like about this stock is it's one of the 3 telecom stocks that people are really expecting quite a bit from. And Vodafone also recently announced a cloud a longer term cloud data deal with a few companies such as IBM. So it's looking strong fundamentally as well. But honestly, I really just want to make sure I lock in a 5% return in a few weeks. The next spread that we're going to look at is a credit spread on Twitter. We traded this a few months ago, and I wanted to take another look at it. So Twitter, symbol TWTR, that's Thomas William Thomas Richard. The stock ended the week at $33.27. And I'm looking at selling the February 32-31 put spread at 34 cents, which creates a maximum loss of 66 cents. Now, you would enter this trade by selling the February 32 put at $1.71 and then buying the February 31 put for $1.37. Now, this is a credit spread because we are selling the spread, and this trade makes the most money if stock prices stay above $32 per share. So the thing about spreads in general that I wanted to point out is that this is a great way for those of you who have lower account sizes. It's a great way for you to be able to get active in options with very defined loss and gain situations. And it also requires less capital, quite a bit less capital. So your brokerages should allow you to get involved in debit and credit spreads with lower account sizes. Our final trade of the week is a debit spread on eBay, symbol EBAY, just like it's spelled. Edward Brian Adam Yellow. Stock ended the week at $31 per share. And I'm looking at buying the February 30-31 call spread. It's an in-the-money call spread, paying 65 cents for it. And that creates a maximum gain of 35 cents or a 53% return on your risk capital. Now, you would enter this trade by buying the February 30 call for $1.90 and selling the February 31 call at $1.25. This is a debit spread because we are ultimately buying the spread, and this trade makes the most money if stock prices end above $31 per share. I know that the technology stocks have done well. You can see how the NASDAQ has also responded this year so far. It's had a great percentage return relative to the other two major or overall market indexes, both the the S&P 500 and the Dow Jones Industrial Average. So overall, I like this trade as well. And that's it for the week as far as trade ideas. So you've got the covered call on Vodafone, the credit spread on Twitter, and the debit spread on eBay. If you have any questions, definitely reach out. Or any comments. I love comments. You can reach out to me at eric@theweeklyoption.com. Also, I'd love to have some of you guys, if you like this show, feel free to go onto iTunes or Stitcher or wherever you listen, maybe Google Play, and leave a review, preferably a 5-star review. But, let me know what you think. I always love it. And if there's anything you want to hear me do on the show, if you want me to change anything, feel free to reach out. Cause I definitely want to make sure that this show is something that you enjoy and keep listening to. And hey, feel free to share it with friends. If you have friends that are talking about option trading, thinking about option trading, but haven't quite gotten involved, or maybe they're active, feel free to share it with them. I've actually shared this show with several of my professional trading friends because we all started off trading options using things like all the Greeks, the Delta, Theta, Gamma, Rho, and Vega, and to have a show that doesn't just harp on those the Greeks is unusual, but I've explained and I think defended successfully my methodology against many of the professionals, and many of them sit back and say, you know what, that makes sense. Let's just talk about where we make money, where we lose money, and what we're going to do next, depending on the outcome. So that's it. I'll stop rambling. Have a phenomenal weekend and a fantastic week. So happy trading. And also wanted to point out that The markets will be closed on Monday. This upcoming Monday is Martin Luther King Day here in the U.S., where we take a moment and celebrate one of the people that made quite a difference in just the overall way of life in the country. So I know I'll end up working quite a bit on the show and on some other projects that I have, but a lot of folks will be out of work, or off of work, is a better way to put it. So that is it. Markets will open on Tuesday, so we'll have a shorter week trading. Have a happy trading week. Take care. Bye-bye. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.